10 minutes and then join back at 10:30. And then we'll continue with the remaining class. Okay.
Okay, ma'am.
Last class, at the end, we were doing types of budgets. I have explained all these things. Only ABB was not done. So let's understand what is ABB. So you must be remembering about activity-based costing principles. So no, activity-based costing is used in situations where the overhead costs, which are indirect costs, they cannot be identified with the cost object. Therefore, to allocate these overhead costs, the principles of activity-based costing are taken into consideration to allocate it appropriately so that the cost per unit can be ascertained and selling price can be determined accordingly. So while preparing budgets also, the problem arises with what amount of overhead should be estimated for the future, because see, they are not identifiable. That identifiability is missing. Identifiable with the cost object, that concept is missing. So when it is not possible, then approach the principles of ABC. I understand what are the activities that would be taken up in future and the usage of that cost object or the activity, appropriately allocate the total amount of overhead cost among the products or whatever is the criteria. When the uses of the principles of ABC to estimate the firm's future demand for resources and hence help the firm to acquire these resources more efficiently. So in terms of estimating the overhead cost, when principles of ABC are approached and budgets are prepared, we call that to be as activity-based budgeting. How would they be tested in the exam? So if because budgeting is not a new topic which the students learn, someone who gets enrolled into ACCA program, so at the basic level papers, MA is there, management accounting. So management accounting, there itself the students learn about budgeting and are also tested about the different types of budgets, etc. there. So budgeting concept is not a new concept for students who are taking up APM paper. So after that, even when PM paper is done, at that time also, see certain aspects about forecasting of budgets and all is learned at PM paper, and then the testing is done at PM paper. So to a great extent, preparation of budgets will not be included in the case studies. But that doesn't rule out the possibility of a question where you are asked to prepare a budget. The chances are very less. But then what type of questions can be asked? See, already maybe like in the appendix, there is a budget prepared and provided to us. Maybe we have to even comment about whether the budget that is prepared is appropriate or not. What else could have been included, or what performance indicators would have been best included into the budget, or based on the budget preparation, maybe we have to comment about the performance, whether the performance is up to the mark or not, etc. So that those kind of questions are mostly asked. Okay, I am not denying that budget preparation will be included in that. Chances would be less. The reason why the chances would be less is because they are already evaluated, they are already assessed based on their ability to prepare a budget in the earlier exams. Now it is not a new thing for them, but at this point of time, because it is advanced performance management, analysis is given a lot of importance. So therefore, analyzing based on already prepared budgets is what can be expected in the examination. Activity based management, that's a new topic. The concept of activity based management, see, when we talk about anything as a based management, activity based management, value based management, So it is, the focus about that particular concept is adding value to some stakeholder. If it is based on activities, we know what is uh, activity based concept. Activity based costing talks about allocating the appropriate amount of overhead cost to the product so that the right cost can be determined. If it is determined, if the right cost is determined, it is useful, it is adding value to the customers, because the right cost, right selling price, and it is adding value because of the right selling price. Value is added to the end user, who's the customer here in this situation. So ABM is the use of activity based cost information for management purposes, and they are, what's the customer profitability analysis, value engineering. The concept of value engineering, you must be knowing that, see, where efforts are put into cut down the cost, control the cost, but also taking into consideration the quality is never compromised. So that's value is enhanced um, by way of reducing the cost, but not the quality. That's the concept of value engineering. So here, when the principles of activity-based costing are used, and they, with the help of that, if they are able to understand the customer profitability and the value engineering aspects, that's called as ABM, activity-based management. ABM uses detailed economic analysis of important business activities to improve strategic and operational decisions. And the two key features of ABM are able to know what's the appropriate cost visibility is there, and then generation of activity cost profiles. So when the principles of activity based costing are used to understand the profitability situation, where they can add value to the end user in terms of uh, providing the right selling price, and also not cutting down on the quality, the value is enhanced to the customers. Such kind of management is called as activity based management. Conceptually, you can be tested. Maybe you are asked to explain about what is activity based management. 3 to 4 marks can be allotted for any concept which is asked as a direct question. So 3 to 4 marks can be expected. The next topic is, what are business structures? Business structures, here it talks about functional organizations and divisional organizations. The structure of an organization, so generally it depends on the size. So let's say that the size is very small, the organization size is very small. On the if the size is small, the kind of structure, organizational structure which is considered is entrepreneurial structure, which is that size is small, the owner who starts such kind of a business can manage all by himself. So the owner alone can manage, entrepreneur can alone can manage, or maybe a manager is appointed, only he's the investor there, a manager is there to manage the entire organization. So we can call that to be as an entrepreneurial structure. So it's small size, simple, easy to manage, etc. But as the size keeps increasing, we see that it may not be possible to manage all by the entrepreneur, all by himself. He cannot manage it. So then what is done is, the work is grouped together based on the functions. Still, the manager or the management uh, is ultimately in control of the management of the organization. Everything is under their control, but some kind of grouping of the activities based on the functions. Maybe all production activities are grouped as production function, administration function, selling, distribution, etc. Okay, so then we call this as functional organization. If it is further increased in size, then it becomes difficult to manage by the management. The manager or the management cannot manage it. So then what is decided for such an organization? They are divided into multiple parts. So maybe they are divided into divisions or departments or strategic business units. So to manage it effectively, when they are divided, each division, there is a manager appointed. So the authority is delegated to the manager. So because the manager now will be taking up the responsibility of the division or the department. So to take decisions related to that department, authority has to be given. So authority is delegated. When authority is delegated, based on the authority, he takes decisions. Of course, later on, the accountability also comes into picture. But as of now, the organization is not centrally managed by the management, but it is divided and it is decentralized. The meaning of decentralized is authority is also divided and distributed. So multiple people will have the authority to manage that organization. Such an organization is called as divisional organization. Even if it goes beyond that, also beyond that limit, also maybe they are geographically located in multiple locations, then the sizes are so big that it cannot be managed. They are into diversification, multiple products are produced, etc. So then they consider that organization as a matrix combination. So matrix is maybe location wise, we have multiple locations, then they are into multiple products. So then product wise, then they are divided. So it forms a matrix form of organization. So we are only just now looking into what if the authority is this is a matrix form of an organization. Now we are going to just look into, see, it is not a very small business, it is a reasonably big business, but the authority is centralized. The authority still lies with the top management. The second part of it is the divisional organization. So wherein the organization is divided into departments or divisions. Managers are appointed for these departments or divisions, and they take the decision. So the authority is decentralized and the decision making is taken up by multiple people in the organization, not the centralized management. In such a case, now business structures broadly categorized, we see that they are functional organizations and divisional organizations. So the key point here, what we need to remember is functional organization, the authority is centralized. The divisional organization, the authority is decentralized. It is divided. The authority is delegated to multiple people in the organization. So now, how do we differentiate? What are the points of differences between these two types of organizations? What kind of information is needed in case of functional organizations and in case of divisional organizations? Functional organization, because the top management manages the affairs of the business. If they require information, see, every detail of the organization, if it is provided to the management, it becomes very difficult for them to look into so many details. So mostly it would be provided in a summarized format. Aggregate information is provided in a summarized format. See, data is aggregated at the highest level before feedback is taken. Performance information required by top of the organization for planning and control. The purpose is because the top management plans for the organization, they require information, and that information is provided in an aggregate format. Aggregate data is aggregated and provided. So multiple intricacies or in detail information is definitely not needed. Overall summarized information, if it is provided, that's useful for them to plan for the organization. Now in case of a divisional organization, now we see that they are already divided, and each division has a manager has the authority to take decisions, and his purview of decision making is restricted only to his department. So the department to which he is the in charge, he would be planning for that department. So in detail information about that department or division is all what he would be looking at. he would not be bothered about other divisions information or other details. That is not his concern. He would be only looking at his department and his division. So greater participation lower down the organization, information needs to be available lower down organization. So very specifically relating to his department or his division, and it should not be in an aggregate format, but it should be in detail, so that his decisions are based on the information provided and he wants it in detail. Okay, so that is about the kind of information needed by a centralized organization, by a decentralized organization. Now, in simple terms, if we look into that, the main advantage with the centralized organization, see, top management prepares one set of plan that is communicated to others, and they implement that plan. It is easy to plan and implement, can have a better control because they have decided on what is the plan, and they can have a better control over the affairs of the organization. In case of decentralized organization, so planning itself will become a difficulty there, because see, multiple divisions, all of them at the time of planning, see, overall planning when it has to happen, um, multiple opinions will be taken into consideration, because multiple managers are many managers are there at multiple levels. So a centralized plan is not possible. So participation here becomes, in terms of planning, participation becomes very difficult. Agreeing upon one final decision is not possible. And one thing would be there in terms of advantage for divisional organization is, we see that they feel more motivated because they are more focused on their individual department. Okay, they feel that yes, their decision, their feedback is more important for planning, and they feel motivated. Everybody actively participates. So that way we can see that there is better performance in case of divisional organizations. In case of functional organization, better control over the affairs of the business. So that is how we can see. Um, Disadvantage wise, we see that functional organizations, the employees or the staff are demotivated because they feel that their opinion never mattered to the management. So that can result in demotivation in among the employees. That's one disadvantage. See, divisional organizations, because they are too much of time will go in terms of planning. Lot of time will be wasted, etc. Of course, there are other disadvantages also. We will be discussing that in detail now. What are the advantages for performance management in case of functional organization? It says it's easier to assess and control performance of functions. So that's very easy, functional organization. Digital organization, they are divided. So then it becomes easier to look at only their division. So that's an advantage. It is not the overall organization. It is only very specifically limited to their division or department. So easier to assess divisional or SBU performance, strategic business unit. Performance management can be tailored to local needs. So they can only focus on their department, division, and take up the work. They don't have to look at the other aspects of it. Problems for performance management. So demotivation is one thing, that is in a generic sense. Then we see the other problems are only the summary, the aggregate level things happen. So they can only know the overall performance, but intricate information is not possible to get. Difficult to assess performance of individual products or markets. So how is that each product is or each department is performing? What is the performance? Such kind of things are not at all understood. Overall, as an organization, whether they've made profit or not, all can be known. But other details about at what level the performance was good or not good, what measures can be taken up to improvise the performance. Such kind of information is not available. So product wise, market wise performance is not known. Another thing is, see, if they enter into diversification, this kind of a management is not at all suitable. See, one management looking into multiple aspects, entering into multiple markets, global market, international market, or capturing various markets, managing such kind of activity becomes difficult. If they keep on adding products to their product line also, it becomes very difficult to manage such kind of business. So that's another disadvantage, problems which arise with um, functional organization. Digital organization, see, the problem is with too much time is spent on planning. Okay, but then tailor-made planning can be taken up, so that can be looked at as an advantage, even if multiple people or multiple levels at which the managers are involved in planning. Even if it is time-consuming, also still they can cater to their department requirements. So that can be looked into as an advantage also. See, when they are divided into departments, let's say there is an organization. If it is divided, so let's say each department, each division, a manager is there. Then a manager is given authority, takes decisions, focuses only on their particular department. Their purview is limited to only their particular department. Okay. So everything for their department, they focus on that and then plan for that. But in an organization, there may be other departments also. In an ecosystem, in a in the modern aspect of an ecosystem where um, departments or divisions, or for that matter, even at the organization level also, there is dependence of um, every entity. There is dependence on the other one. So everybody is dependent on others. Interdependency is there. If within an organization, even if they are divided into divisions, they are dependent on each other. They cannot exist in isolation. It is only for ease of managing that they are divided, but it is an important aspect to understand that all the departments are dependent on each other. Therefore, that point has to be very well realized by the managers. Then later on, we will be looking into performance evaluation also later on. So when the performance is measured, the managers will be assessed based on the performance, certain variables like what's the profit margin, what is the return which they have earned, etc. So those aspects will be taken into consideration to evaluate the performance. When authority is given, along with authority also comes the responsibility, or the accountability also comes into picture. So when they would be very cautious about what is their performance. So in this process of improving their performance, there may be situations where they deny to cooperate with others. So that becomes a major problem. So the first one which talks about is transfer pricing issues. So transfer pricing you have learned in PM, where the output produced by one department is required by another department as input. So in such situation, at what price would this output be transferred to the other department? So the department which produces and sells in the outside market because is called as the selling department. Now in such a situation, if they have to take a decision about transferring these output to another internal department as input, if they are transferring, at what price? Because otherwise in normal situation, the selling department will be selling the products by adding a profit margin, but for the buying department, it will increase their cost, because cost price plus profit will be increased cost for the buying department. So it may not be feasible for the buying department to spend such a high price to purchase the input. So in such situation, what do they do? What are the methods? Of course, we will also be looking into those methods and take up a case study also. So problems relating to transferring the material from one department to another department arises because they would be more focused on their department and refuse to cooperate with the other department. So that is one major problem which arises with decentralization, divisional organization. Then see, they are divided into divisions is one thing. So all the things which are taken up by the department will be accounted. So the costs that are incurred, the revenues that are generated will be accounted for their department. But apart from this, at an overall level, the organizational level, there are certain costs that are incurred, like top management salaries, establishment expenses. So there are certain general costs or common costs, what we call. So they are incurred at the organization level. So these costs also have to be borne by the individual department. So the common costs, the organization-wide costs that are incurred are divided and distributed among all the departments. So in that case, they may disagree with the share of costs that are allocated to their department. So that is another problem. Who would bear what portion of the total cost is an issue which can arise. That is a problem. Then potential goals with lack of goal congruence. What's this concept of goal congruence? See, goal congruence is when everybody works towards the achievement of the common goal. Common goal is the organization goal. One second. When they work towards the achievement of the organization goal, so that is called as goal congruence. Everybody has to work towards the ultimate goal of the organization. But now that they are divided into departments, they will have their department-wise goal. Their department, how they want to perform, what is that they want to do. See, that would be a goal at the department level. Then they may focus on their department goals, but not at the organization goals. See, when departments have their goals, they should be in alignment with the organization goals. Theoretically, that is the scenario. See, they can have a goal, but that goal has to go along with the organization goals, in alignment with the organization goals. But if they fail to do so, then that would be lack of goal congruence. Everybody is having their own set of goals, and then they're working towards achievement of their goals. They're not focusing on the goals of the organization. So that is a situation which can be considered as a problem with divisional organization. Okay. So as you read through the case, if there is some information related to the business structures, maybe there is a mention that it is a centralized organization. So highlight the problems that are associated with centralized organizations, or it is a decentralized organization. Understand the advantages and the disadvantages from that structure point of view, and then attempt to answer your the questions with such kind of inputs. Okay. Then network structure, we see that the the core companies which are into the core businesses, the core business of buying and selling, whatever is their product or service, they are into that. So that's called as a core company. Apart from that, we see logistics companies where they are involved in the material movement, moving the material inwards, outwards, etc. So logistic company, designing of the product process, etc. So we have design companies, manufacturing companies where they manufacture, convert the raw material into finished goods. We see finance companies. Then we have sales and marketing companies. Finance companies provide finance, sales and marketing will take the finished goods to the customers. So have an idea about or knowledge about what are the different types of companies. Conceptually, what is the role of each type of company. Then understand about what are the complex business structures. We've learned one broad category of classification of business structures. We just understood that there are functional organizations and divisional organizations. Apart from that, we also see that there are certain other types of complex business structures. We see joint ventures and strategic alliances. Then we have multinationals, virtual organizations, supply chains, and divisional structures. See, joint ventures and strategic alliances, these are structures where people from different organizations or different organizations come together to carry on with the activities. So that, see, there is a business done jointly by um, coming together and carrying out with the activities. See, if they are registered as a new entity, it is a joint venture. Without establishing a new entity, but only to carry out the activities, to carry out the business activities, um, yes, there is an alliance. It's a strategic alliance, but there is no separate entity as such which is formed. So that's a strategic alliance. Multinational, where the presence is there in multiple nations, that's a multinational organization. Then a virtual organization, it is present as a network of multiple activities. There is no physical location which can be seen, but they are basically present as a network of different activities. That's a virtual organization. Supply chain is a sequence of activities that is connecting from the supplier till the customer. So supplier supplying the material received by the factory of an organization, the manufacturing activities carried on, then they are moved to the warehouses, then ultimately to the customer. So it's a sequence of activities, chain, isn't it? So it's a sequence of activities connecting from the supplier till the customers. So that's supply chain. Digital structure just now we've looked into. So the high level of interaction and interdependence between partners makes performance management and measurement difficult. So in all these type of organizations, we see that there is dependence, interdependence of these organizations on each other. So focusing on that, we have to analyze the performance of the organizations in case of these business structures. The next topic, let's see what are the characteristics of services. So there's one case study on service industry. There is one case called as Hallmark Hotels. But straight away today, I will not start because um, we will also discuss something about other aspects of today, since we've already done one case study. So let's not do another case study today. So we will continue with that, but connecting to that Hallmark Hotels case study is a 50 marks case. It's just not about service industry. Service industry question is only one part of it. Multiple other topics are there. So until I finish those topics, I will not touch on that. There is a balance scorecard or some certain other topics are also there. So let's wait for some time, and then if possible, next Saturday we can do, or else we can postpone it to the coming Saturday. The characteristics of services. There are 5 characteristics of services. The first one is intangibility. Services are intangible. There is no physical form which can be seen or touched or felt or anything. Services that are provided are intangible. Let's say there is a professional providing services. Professional like a doctor providing services. Services that are provided are not tangible. If there is a chartered accountant, so the advisory services provided by a chartered accountant are intangible. If there is a transportation company carrying the passengers or goods from one place to another, it's a service provided. See, that service we are talking about, carrying them from one place to another place. So the service that is provided is intangible. A hotel is there providing accommodation. Okay, see, through a hotel room, that is a different thing. But the service that is provided, that service is intangible. Tangibility is not there. Products are tangible. We can see the physical form of the product, seen, touch, felt, etc. But the services are intangible. The output is not a tangible product. There is not a single measurable output. Intangible factors such as professionalism may be difficult to value. So we cannot see the service that is provided. It is not tangible. Second one is heterogeneity. Heterogeneity is customized. Each client to whom the services are provided, they are not provided as in a standardized format. Products are standardized. Every unit of the product that is produced is similar to the other units. So it's a standardized production which is taken up for products. But services are customized. The same service is not provided to every patient visiting the doctor. The same service is not provided by a chartered accountant. The same distance is not provided to every customer, or the load of material that is transported from one place to another place. See, we see that they are basically as per the requirements of the clients or the customers. Okay, so that customization is what we can see as an attribute here under services, heterogeneity or customization. The output differs due to the high level of human intervention, demand for customized services. Another important thing is, as the service is provided, it has to be simultaneously also consumed. If the production is done now, it cannot be consumed in the next period. See, the service, if it is provided, it has to be consumed immediately. As it is being provided, it has to be consumed. It cannot be carried forward to the next period because of its perishable nature. If there is a transportation, there is a bus carrying passengers as on, let's say today, today's date is 2nd July. If there is a service provided as on 2nd July, as the service is being provided, it has to be consumed simultaneously. July 2nd's service of carrying the passengers cannot be carried forward to July 3rd, and it can be consumed on July 3rd. If it is used on the same date, well and good, fine. If it is not consumed, it perishes. It cannot be carried forward to the future period. The hotel accommodation which is provided as on a day, July 2nd, has to be utilized on July 2nd. The accommodation facility provided should be used on July 2nd. If it is not used on July 2nd, it perishes on July 2nd. It cannot be carried forward to July 3rd. July 3rd will have the occupancy or the vacancy availability based on July 3rd's date. Because it was not occupied on July 2nd, it cannot be carried forward to July 3rd and say that because yesterday it was not consumed, it will be used on July 3rd. July 3rd will have its own vacancy. The unused facility, the unused services cannot be carried forward to the future period because of the perishable nature. It has to be consumed as it is being produced. Simultaneously, as the service is being produced, it has to be consumed. If it is not consumed simultaneously, it perishes. Okay, simultaneity and perishability. Because it cannot be carried forward to the next period, the next attribute is, we see that there is no transfer of ownership. The ownership is not transferable. But products, if they are not consumed now, they can be consumed at a later period. If they are not using that, they can transfer it to someone else also. So that feature is there with products, but it is not available with services. So there are 5 attributes or characteristics of services. First one is intangibility, then heterogeneity, customized, simultaneity, that is as it is being produced, it has to be consumed. Otherwise, it has that attribute of perishability, and it cannot be transferred. The ownership cannot be transferred. So no transfer of ownership. Now, the next concept is about business integration. So the organization as a whole, how do we look at the organization as a whole? What is it made up of? There are two models given by two people. One is given by Porter. Porter has explained the entire organization in his business integration model, called it as value chain business integration. Another person is Mckinsey. Mckinsey also has explained the organization as a business integration model. He explained it with S. There are 7S he used and explained it as Mckinsey's 7S model of business integration. Um, See, individually, I mean, I will explain both of them in today's class. It will not take a lot of time, very less time. But from the examination kit, see, this is part of this question is part of an essay question, that is a 50 marks case study. Maybe some other time we will take it up, but individually, exclusively on 7S model, there is one case study. We'll attempt to answer that one, at least read through from the exam kit. Okay, I'll first explain what are these models. Business integration model given by Porter's value chain model, wherein Porter has, while explaining the organization, has divided the organization into two parts based on the activities that are taken up. The first set of activities are called as primary activities, and for these primary activities to be carried on, there are certain other supportive activities. So first, let's look into the primary activities. Now, this kind of a model is applicable only for manufacturing businesses. See, if it is not a manufacturing business, if it is a service business, it is called as by some other name. Okay, it's not value chain. See, that is called as a value shop. So that's not part of our syllabus as of now. So let's not get into that. But remember one aspect, that value chain business integration model is applicable for a manufacturing business. Okay. So the first set of activities are primary activities. So primary activities, we see them as first one is inbound logistics. The logistics refer to the movement of material. We see first activities inbound logistics, then operations, then outbound logistics, marketing and sales, and services. So these are the primary activities. So inbound or material which is coming into the factory, inbound logistics. So first activity which is required is the material has to come into the factory premises so that the main operation can be taken up. What's the main operation? Main operation is the production of products. So material has to be converted into finished goods. So when the raw material comes into the business, inbound logistics is the first activity. And after receiving the material, this material has to be converted into finished goods. That's the main operation. After the material is converted into finished goods, these finished goods have to be taken out of the factory premises. So usually they are taken into warehouses where the finished goods are stored. And after the production is completed, then the information about the products has to be taken to the customers. Now the customers have to be attracted with their products. So then marketing and sales activities are taken up. They are the advertising is done, the marketing for the products is taken up, the distribution. So if it is sold in wholesale markets, retail markets, from there it has to go to the retailer, and from their retailer to the retail customer it has to be delivered. So the whole set of activities where the finished goods are ultimately delivered to the customers. So marketing and sales activities. So the activity does not end with delivering the products to the customers. So sometimes we see that even after the product is delivered to the customers, also there are certain services provided to the customers which are called as after sales customers, after sale services to the customers. Why? Because at the time of sale, there are certain agreements um, which are signed and agreed upon by the seller to provide certain services to the customers with for a stipulated period of time. So we call that to be as a warranty or certain other conditions under guarantee. So any kind of service which has to be provided during that stipulated time period will be taken up by the business. So most of the time it is free of cost, in terms of repairs and maintenance, or in terms of replacement of a component, etc. That's all free of cost. Or sometimes we see that a very minimum charge is charged, but that is an activity which is taken up by the business because of the terms and conditions which they agree upon at the time of sale. Okay, so the primary activities are inbound logistics, operations, outbound logistics, marketing and sales, and then after sales services provided to the customer. But these primary activities are not possible without the help of the supportive activities. There are 4 supportive activities. We see firm infrastructure, technology development, HRM, and procurement. Infrastructure basically talks about the facilities. For infrastructure is facilities. So what are these? What are the things which are covered under infrastructure? Is basically see the facilities in terms of all the fixed assets to be provided. We also call them as we can also put this as property, plant, and equipment. If land and premises, land, building, premises, plant and machinery, tools, equipment, etc. When all these things are available, the primary activities can be carried on. So infrastructure is important. So any effort to arrange this infrastructure is part of the supportive activity. So making arrangements for the property, so there should be a land, a building, or premises, factory, building, etc. Those things are needed. Plant and machinery is needed. Equipments and tools are needed. So all of them are part of the infrastructure. So that is important. Those things have to be arranged first. Then the technology which they are using, technological development, advancement, see, all that is part of technology development. See, to what extent did they adopt technology? Did they update the technology? Are they on par with the market, with the competitors, etc.? So those features, those facilities that are provided are part of supportive activities. Next is, see, the work to be carried on, it has to be carried on by the people. So people have to be recruited. So the process of selecting, recruiting, placing them in their job, providing them training, so that the work is carried on. And after they are placed in their positions, then uh, keeping a track of their work and performance, and then based on the performance later on when they are appraised, the rewards and recognitions which they receive, and then their promotion to the next level, everything is taken up by the human resource management. So it starts from selecting the candidates until they leave the organization. Every bit of it, every part of it, if it has to be taken care of, it is done by human resource management. Okay, that's again another supportive activity. Finally, we see that procurement. Procurement is about procuring the material which is required for the main activity. But what is difficult about procurement? See, generally, we do not see that material is purchased randomly from the market, from anywhere. It is not done so, because material is required in bulk quantities, because the production activity is a continuous process. It is usually purchased in bulk quantity, and randomly it is not purchased. So there is a process which is involved. We see that orders, before orders are placed with the suppliers, Suppliers in the market are asked to present their quotations or tenders. So they are asked to submit their quotations. Based on the quotations where they fill the details about what is the price, the quality, the quantity which they will be supplying, based on those terms and conditions, etc., the right supplier is selected. Then order is placed with the supplier. Supplier delivers the material. On receiving the material is checked for its quality. Then it is moved into the factory premises. Then the payment is settled. So that is a procedure which is time consuming. It is not instantly, it cannot be done instantly. Today there is a requirement, by tomorrow the material would be received, is not the situation. It is a time consuming process where they contact the supplier, select the supplier, place an order with the supplier, receive the material, check the quality, and then settle the payment, etc. So it is a time consuming procedure. So the time period which is required from the time when an order is placed until the time it is received is called as lead time. You must have learned in inventory management, lead time. Okay, so there is an activity which is involved in terms of acquiring the material, procuring the material. So that's procurement. Once the material is procured, then the inbound logistics, then the other activities are carried on. So all these activities, the primary activities and the supportive activities together are here to enhance the value that is provided to the end user, the customer. Okay, so their focus is on maximizing the value that is provided to the or offered to the customer. So that's the um, model explained by Porter's value chain business integration model. Then the same thing is also explained by McKinsey. McKinsey has explained this model by using 7S. So 7S, then we see that strategy, structure, systems. Then we have skills, shared values, style, and stuff. So the 7S can be again divided into two parts. The first three are grouped together and made it into one category, and the next four are grouped into one category. The first three we call them as hard factors. And the next four are called as the soft factors. So the organization is explained with seven factors or 7 points, and all of them are S. We can see that. So what's the strategy of the organization? No, we need to understand what's the strategy of the organization. So strategy, what kind of a plan do they have? What is that they aim to achieve? What do they I mean, what's their goal? What's their objective aim? And to achieve that, what strategy do they adopt? That's about the strategy, um, the factor strategy. Then the structure. Just now we've learned about structure. So what is the structure of the organization? What do um, I mean what is the style of operation? So is it centralized? Is it decentralized? So it talks about that's the structure which is present in the organization. So that is second S. Third is about the systems that are prevailing in the organization. What type of systems are prevailing? So do we see there is a sorry, do we see that there is bureaucracy in the organization, or there's no bureaucracy? So maybe they work in a environment where cordially they work, and then that levels of hierarchy are not strictly followed, the protocol is not followed. So what type of system is prevalent there? That we have to understand. So that is at the organization level. Then they are these three are together called as hard factors. Then we see that involving the people and the style of working, they are grouped together and called as soft factors. So basically, they talk about staff, how many of them are they, um, was there any change in the staff number, etc. What skills do they possess? So talk about, look into the skills which the staff of the organization possess, etc. So skills we have to talk about. What are the shared values? What values do they carry? They possess. See, maybe they are highly motivated, or they require someone to guide them. Maybe they are proactive or they are not proactive. Um, then we see that as part of shared values, we can also see that maybe they can uh, work in environment where um, they're okay working as groups. That's there, or they prefer to work individually. See what shared values do they have. Um, so that we have to identify that aspect of it. The last one is style. What's the style of working? Is it in a free environment, a democratic style, or there are rigid rules and regulations? So um, they have to be strictly followed. That kind of an environment, that kind of style of working. So we need to understand all the 7 factors to understand what is an organization made up of. So what's the strategy of the organization, the structure? The structure of the organization, the systems that are present in the organization. We see skills, shared values, style, and staff. Okay, these are soft factors. We have half an hour time. Um, let's just see if we can read through that and then understand. Um, let me put you to the case study. So we'll read through that. It's a very small question, but exclusively on Mckinsey's 7S. It's a 25 marks case. Briefly describe Mckinsey's 7S model, which is for 5 marks. Conceptually, what is that concept all about? We have to explain. That's for 5 marks. Using Mckinsey's 7S model, analyze the key performance. Then we are also asked about 2 critical success factors with 1 key performance indicator. So that also we will see. But let's read through the case. I hope you're able to see this on the screen. Um, It says Bricks was started 5 years ago by Tom Bricks to offer lifestyle and some counseling services online. The company's initial strategy was to grow its share in the market. So there is a mention about what's the strategy was to grow its share in the market, and given it had very few employees. So there is a mention about employees. Employees are staff, and its structure was simple. So it's not a divisional structure, it is just a functional structure. Okay. The structure is also mentioned. There are very few formal systems. So very formal systems, few formal systems, mainly because the company didn't need many at this time. Tom adopted a democratic, so the style is also given democratic but chaotic management style. So we also have about style, and attracted experienced staff. So the staff who were appointed were experienced staff who were adventurous and valued teamwork. So teamwork talks about their shared values. Initial joiners were also offered shares in the company to help motivate them. Since then, the company has grown to become a large business with 400 employees and has now achieved a 50% market share in its domestic market. Then initial employees were few. That's one important thing given. Initially, there were very few employees, but now the number grew to 400. So the number of employees are now 400 in the organization. So it grew in size, and now it has 50% market share in its domestic market. The structure, initially it was a simple structure, but now the structure has changed. It is now a well-oiled bureaucratic machine based on functional lines with strong service support. So initially, how they have started, it was a simple, so centralized organization. Now it has moved into a functional lines with strong support. So things are not very simple there. It has changed into a bureaucratic organization. Okay, rules and regulations are in place. They have to follow all of them very strictly. To facilitate this, Tom introduced new motivation, reward, and control systems based on bonuses and specific individual targets, recruited experts in different fields, and encouraged a culture of enthusiasm and excellence. So Tom introduced new motivation, reward, and control system. So there are other aspects. Earlier, it was a freestyle, democratic. Of course, it was chaotic. That's a different thing. But it was a freestyle, and the staff were experienced staff. They valued teamwork. Now here we see that maybe they were not so adventurous, and they were not valuing the teamwork anymore. That's why there is a need for new motivation. For them to perform better, there are rewards in place and control systems based on bonuses and specific individual targets. Then they have recruited experts in different fields and encouraged a culture of enthusiasm and excellence. However, Tom has recently become concerned about the following. It says, trust and teamwork have disappeared due to so many new employees. He has been criticized for still trying to run the company as if it were a small business. There is no formal strategic planning process in place. To grow further, Tom is considering expansion into foreign markets. So we need to explain the model, and then with specific reference to this particular organization, using Mckinsey's 7S model, analyze the key performance management issues facing the firm. Then, so let me put this in an Excel file. Shall we do the case study now, or take it up to the next week?
Ma'am, we can do it next week, ma'am.
Okay. So, did you understand the concept? So we just have to list out first, write the hard factors, write the factors, and then talk about it. We will do it next week. Then write the soft factors and talk about it. There's not much content. Also, half a page is there. That's it. That's it. Very small one. But the focus is all on, I can say, 7S model. We'll just do BPR and then wind up the class. Okay. Then the next topic is information, then technology, those aspects we can take up next class. But now we will do BPR. That's the last topic we'll do in today's class, and then we'll wind up. And depending on the availability of time, we'll take up a case study whenever time is available. Because next week we have to deal with one case on Mckinsey 7S model. First, we'll start with Mckinsey 7S model in the next class, like next Saturday. BPR. BPR is generally in an organization, improvements are taken up. on an incremental basis. As there is a change happening, according to that, the change in the way the work is carried on also happens. So incremental changes are taken up from time to time, because maybe they're growing in size, or the customer base is increasing, etc. Sometimes those changes are not sufficient. Maybe they have to change at an altogether at a different level, different pace itself. The way they are carrying on with the business is no longer applicable in that particular situation or scenario. So then they have to think at a radical level. So small incremental changes are no longer sufficient, but they have to think at a different level, at a radical level, so that the work can be carried on at that particular level. So BPR, it talks about BPR is the fundamental rethinking and radical redesign of business processes to achieve dramatic improvements in critical contemporary measures of performance. But why is that there is a need for a radical change, radical redesigning? Why is it needed? See, in organizations where, for example, if we look into that, if the work is carried on manually, see, no matter how many improvements are brought about in that manual work also, it is definitely not a match to the automation, to the to adopting the technology. See, when automation is adopted, we can see that the work is assigned to machines. So the work is carried on by machines, or technology is adopted, and then the work is carried on with that. See, if we are talking about those aspects, um, it is definitely nothing uh, comparable. They are not on par. The manual work and then the work which is done by machines are not comparable. See, the reason is there are certain limitations when human beings are employed in the work. See, men can work only for limited number of hours. They require a lot of breaks in between. The speed is also very slow. They become tired very easily. Okay. um, because the speed is low, the output that is produced is also very minimum. But whereas if machines are put to use, machines can run for longer hours. Sometimes we see that they can be used for 25 by 7, 24 by 7. So all through the day they can be employed. The speed is definitely very high. Because of the speed and because of long working hours, the output produced is also very high. When output produced is high, it automatically becomes cost effective. So that is a situation which, if it is required, making incremental changes is no longer applicable. Then in that case, they also have to adopt technology. They move towards automation, move towards replacing human beings with machines. That is a radical decision. That is not an incremental change, but that's a radical change which has to be brought about it. So then everything has to be redesigned. They have to be re-engineered. So maybe they have to start from scratch, redesign everything, and then start the work of the business, carry on with the business by rethinking and redesigning from scratch. Things have to be taken up at completely at a new level. Okay, that is the concept of business process re-engineering. So not making changes to the process, but re-engineering the complete process is BPR. Okay. Automation is the increasing use of machinery, the aim being to increase output through more mechanization. Why would the output increase? Because the speed is very high, long working hours, and because of that, automatically we see that the output that is produced also increases. When output increases, more number of units are produced, economies of scale can be realized. So more output can be produced, and it becomes cost effective. Then rationalization is the reduction in labor in a process of manual work that is being carried on has to be replaced with machines so that the efficiency can be increased. Then ultimately it results in customer satisfaction. Improved customer satisfaction is often the primary aim. Okay. Then we see that there are advantages and disadvantages of BPR. The first one talks about it focuses on the needs of the customer. So to enhance the value that is provided to the customers. How is value provided to the customers? See, maybe quick delivery, because the production, the speed with which the production is taken up is very high. So quick delivery, cost becomes less. We'll discuss about why cost becomes less. According to their requirement, the products can be provided. See, when at cheaper prices and good quality, quick delivery, these are the aspects we can look into that, and it is focused on the needs of the customers. So it says it provides cost advantage. CBC, it is a it provides a cost advantage is an advantage. We also talk about that the cost aspect of it as a disadvantage also. It says that it is not about cost, it is not a cost cutting exercise. What does it basically explain that? See, when everything is radically redesigned, there is huge investment which goes into taking up those changes. See, when everything has to be redesigned, investment has to be made into technology. So initial investment is very high. So it is a cost increasing activity. It is not an advantage in the initial phase. It is more cost incurring activity. But but the output that is produced is very high in volume. So very quickly they can reach the break even point and then start making profits. Because the output produced is on large scale, then the cost becomes lesser. That is, it becomes cost effective, because after beyond the break even point, the fixed cost does not increase. It is only the variable cost which increases beyond that. So we can see that it becomes cost effective. Therefore, cost advantages can be realized by the business. Initially, it is costly thing. To invest into the new technology, it is cost incurring, but it is cost advantages, because very soon they would break even, and then they can um, realize the economies of scale. Therefore, it is an advantage. Okay. And then it is not about making incremental changes, but it is about asking radical questions about how the processes can be improved. Not making incremental changes, small, simple changes, but making major changes, radical changes in the organization. Um, Maybe going along with what is prevailing in the market among the competitors, what is the need of the hour, what is the requirement. So looking at that and making changes. So that's about asking radical questions, how changes can be brought about. Then it says it is focused on entire process across functional boundaries. So the entire work is considering entire processes across the functional boundaries. But one important thing is it is it may not be feasible to implement BPR across the organization in one go. So generally it is taken up as phase by phase the changes are brought about. See, the whole organization to change in one go is lot of disturbance in the organization, because everywhere the changes have to be brought about, huge investment is required. Next, everybody has to get adjusted to whatever is happening around. um, Things may not be clear, they may not understand how to implement the new changes, etc. So that's quite dynamic. That's revolutionary. So it is considered for the entire organization, but general practice is that it is implemented phase by phase. Okay. Then anything which is unnecessary, such things can be eliminated. Criticism, it talks about common misconceptions about BPRR, that it is just about making small changes to existing processes. No, it is not about incremental changes, it is about radical changes. It is a cost cutting exercise. Initially it is not a cost cutting exercise, but Over a period, when the output increases, it becomes cost effective. BPR requires major commitment by the whole organization. Even if the changes are implemented phase by phase, everybody's attention is required. Everybody's focus is there on the on that phase when the changes are brought about. So it requires the focus of the entire organization. It requires major commitment by the entire organization. So need a focus of the on the entire process to avoid efficiency in one department being provided. See, when in one department BPR is implemented, everybody's focus is shifted to the department. So then other departments may suffer. So the needs the focus of the entire process to avoid efficiency in one department being improved at the expense of the whole organization. So everybody is now focused on where the BPR is implemented. Now, if that is the situation, now if the whole organization is focusing on BPR, they may be overlooking the external factors. The attention can be diverted from competitor activities and market developments. That is a danger which is there. This is just not about implementing BPR in the organization. Simultaneously, they also have to observe the external factors. So that may be a problem. Maybe they may not be focusing on the competitors' activities and the other external factors. Now, some implementations of BPR has just been about automation rather than redesign. Instead of redesigning, doing everything from scratch, instead of that, if they just replace men with machine, it is only automation but not redesign. So that is another criticism of BPR. Okay. Quite the content we have covered in today's class. Many topics we've covered. We've done one case study also, but there are some case studies which are pending now. We will have to do about see budgeting aspect. Maybe exclusive case study cannot appear in the may not appear in the exam, but believe me, budgeting aspect will in fixed 50 marks case study especially, um, at least some part of it will touch upon the budgeting aspect of it. So one paragraph, one question, one small area about the answering will touch on budgeting. So be sure about how to answer that concept. Then we've learned about what are the different business structures, the main broad classification also. We've learned about complex business structures, characteristics of services. I told you that we will take up a case study, but maybe after 2 weeks or so, we will take up a case study on services. Porter's value chain is also not, we don't have an exclusive case study, but Mckinsey, we have just now read through that. So next Saturday when we come, as soon as we start the class, we'll answer that question. And BPR. BPR also, there is one case study we can pick it up depending on whether we can take it up next week or postpone it to some other day. We will do that. Okay. Next is information, and then we will be learning about various elements of technology. So all that we will take it up in the next week. Any doubts?
No, ma'am.
From last week's attendance, we see only Mohan is absent. The rest of them are all present, isn't it? What's the class size?
It's 7 to 8 only, ma'am. 7 to 8 members.
Okay. The attendance is good. Afshan right now is